Well, this is interesting, Karen, because, I was just checking my watch and the clock here. We're about an hour and 10 minutes past the witching hour, midnight Friday stateside, or high noon, 12 noon here in Beijing. And two things have happened. One, U.S. tariffs, 25%, up to 25% on $34 billion worth of Chinese imports into the U.S. Yes, those have kicked in. China's been promising to respond almost instantly to that. But we're an hour past that deadline. The U.S. tariffs have kicked in. Still no official word or sign that China has retaliated. 25% tariffs on $34 billion worth of U.S. imports into China. So this is really curious. Earlier on, we were talking to an expert about this, and a trade expert about this, and we asked why. And this was Deborah Elms at the Asian Trade Center. And she said, look, it's simply because China wants to maintain the high ground. Remember, it said that it didn't want to be the first one to fire the first shot. It wanted the U.S. to go first and then to respond in kind. Well, I tell you what, it's been more than an hour and still no response. So big question mark there. The other thing I want to draw your attention to is market pricing, and I'm sure you guys have noticed it, you and Steve. China markets, are they still in bear market territory? Yes. But the losses were off session lows, were down 2/3, maybe 2/10, maybe 0.3%. Renminbi is actually pretty steady. The Aussie, not just the market, but the currency is actually steadier today. And that's been a key risk gauge. Remember, we're actually above 74. So what's going on there? Michael Yoshikami, fund manager we talked to, and I know you guys know him well. We talked to him earlier today, and he said, look, it's because it's only, in his words, 34 billion right now. And that's why. And the shrill rhetoric from both sides, that's just a media, a PR war being played out in the media, including, unfortunately, ourselves. We have to talk about this. But he said that when it gets to maybe 200, 400, or even 500 billion, you mentioned that's real money, folks. And that could potentially force both sides to come to the table. But back to Deborah Elm, she also said that, look, the reason that both sides stopped talking, or the last time they talked and then they broke it off, China was saying, look, guys, the U.S., unless you back down on these tariffs, unless we don't even have these tariffs on the table, we're not going to talk. So if that is a condition, right now, it sounds as though silence is going to continue. And that doesn't sound good, which leaves the door open to President Trump to escalate this situation further. Guys?
Martin, it's a morbid fascination just watching this unfold and watching the two parties get further apart in terms of understanding each other. There is a feeling in the hawkish camp in administration and elsewhere that America can win this because they have the largest deficit. They have more goods to put tariffs on. We've been trying to paint the counter argument as well, that actually there are things that China can do to counter the fact that they have, of course, this huge surplus with the United States. Can you give us a little bit more detail on the plans that China could do? If the US puts tariffs on $500 billion worth of goods, the Chinese don't have $500 billion worth of reciprocal goods to put tariffs on. What can they do as a reciprocal fight back?
You're spot on, Steve. And, it's not just plans. It's already been happening in the last couple of weeks, even in the run-up to the actual tariffs kicking in. And what we're talking about here is China could, in effect, make it or bring a lot more pain to the U.S. By using non-tariff barriers or instruments. So what we're talking about here, and you're right, in terms of tariffs, there's only so far they can go down that road. Because if you're talking about $130 billion worth of trade, well, that's what came into China from the U.S. Last year. Excuse me, what was exported to the U.S. from China last year. Look, how much more can they go down that road? So the non-tariff barriers are interesting. It includes, of course, making it a lot tougher to do business for U.S. companies in China. And we do have at least anecdotal evidence that that's already been happening in the run-up to these tariffs kicking in. Spot checks, health checks, safety checks, paperwork that takes a heck of a lot longer to push through. It's already happening. China is already putting the squeeze on a lot of American businesses, and they are complaining. And, even the Chamber of Commerce, they've been lobbying President Trump, of course, to go easy or roll back on these tariffs or back off on these tariffs. He's not listening. And this is the area, you're exactly right, where China could put a lot more hurt on the United States, not just through tariffs.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.